Okay, good morning, everyone. I'm going live a tad early today because I feel like it. No, because there's a lot of stuff going on, and hopefully, I'll have time to get to it. Let me get my screen share going. And we have JOLTS coming up so we can watch JOLTS together like a family. Share screen. Okay, here we are. And then I'll talk about the structure. All right, so while we're waiting for the 8:30 thing, I got 3 minutes. Okay, so yesterday, uh, well, let's start off quickly from Friday where we closed at 40-ish, I guess it was. We closed somewhere around here. Um, Overnight session, we ground up. And then yesterday, we opened over 50, I think near 60, I forgot where. And that was basically, if you remember from I know yesterday, that was the zone that we were supposed to hang out in, the over 50, 60 area. And other than a quick undercut, where are we? I'm in the wrong day. Other than a quick undercut of 50 yesterday, here we are, here's the right day. Other than a quick undercut of 50 yesterday, we, this doesn't look right. This looks like I have the wrong thing here. There we go. That's the right one. Other than a quick undercut yesterday of 50, which was a very buyable undercut. We were chatting in the server. That was, that was a pretty nice pretty nice move. We got a nice few points. So here it is. Yeah, we had that quick undercut and reclaim of 50, and kind of went to 60. And overnight session, we kind of ground down to 40, and now we're just kind of chopping in a zone at 50 again. Okay, so that's where we are. A few things to say just about the road ahead, real fast. We know we have the government shutdown noise. Historically, it's a blip at best, if not ignored. However, a blip sometimes, if you're in a intraday swing trade or a short an iron condor at the wrong time at the wrong level, a blip could be a big thing. Whereas if you're in a swing trade or a long-term investor, quote unquote, a blip is a blip. A blip could be 0.3% or 0.4%, which is a blip. But if that happens to land on your short strike or demolishes your long strike, well, then a blip could be a big deal. But again, historically, it's a blip. Also coming up, we have corporate buyback window blackout thing. We're about 50% ish now, and I think it peaks at 68% or whatever the number is. I think I tweeted it out in mid October, perfectly aligned, of course, with the October seasonally weak October, quote unquote. Um, Numbers should be coming in. And also, we have pension fund rebalancing. So I did a deep dive with AI, so I'm going to trust their math. You could do your own math. And with the amount that the S&P is up in September and that bonds are up in September, the rebalance is about 0.19%. However, or maybe 0.19%, I forget what it is. However, that amount of 32 trillion could be a lot of money. So we have pension fund rebalancing, which will probably result in net selling. I've seen different numbers, 15 billion, 50 billion, whatever. Nobody really knows. But if we combine the uncertainty of the NFP coming up, the unemployment numbers on Friday, with the expiration of the JP Morgan collar today and whatever end of month index options are floating around today, uh, and with the possibility of IV spiking, we have VIX here at 16. That's one of my VIX dashboards. We'll talk about that in a minute if we have time. Um, Over here, I have the VIX futures contract, and long story short, this difference is 1.4ish. That's within standard. I want to look at this though. Whoops, that's not what I want. I've clicked the wrong thing there. That goes there. So I tweeted this out. I don't know where I have the chart handy. I mean, I know where I do, but I don't know how to find it handy here. The CBOE put out their, Mandy Sue put out her Monday CBOE digest, volatility digest. You can subscribe to it from the website. It's not a secret. And she talks about a few things. And one of the things she mentions is constituent volatility skew. And long story short, it's high. People are buying puts in the individual names, and it's compressed compared to VIX, also index skew. Now, we could look at correlation, which is how stocks move together, and correlation is going to be low. I'm not going to take the time to show you all those charts now, although maybe I could, and the dispersion index. And basically, the long story is when stocks go down, they all go down together. When they go up, there's rotation. So correlation is low. Energy is up, tech is down. Tech is up. I'm just going to make it up. Staples are down, whatever. So there's things move in a non-correlated manner. Some would say that's healthy. So anyway, so she makes a note about that, and yes, and that we're at like a historic level of difference between the constituent volatility and the index volatility skew. However, with all due respects, Mandy Sue, we have Tesla, Apple, we have big tech earnings coming up within that time window. So I think that part of that is the elevated volatility related to earnings. Earnings vol is elevated. Not saying that this difference is not significant, just saying that Mandy left something out. And I just skimmed through the notes, so there might have been more detail in the note I didn't catch. Okay, that said, my new toy, we're going to look at my new toy. Here it is. Okay, so this is my new toy, my volatility dashboard. And I'm not going to go through what all the components are. The Hurst, well, I guess I will for a second. The Hurst exponent is just a statistical way of smoothing out different time averages, rather than an estimate, rather than an EMA or a Hull moving average. This is the one that Nissim Taleb likes. He of the Versa multi-billion-dollar hedge fund, really smart quant guy. So he likes it. I like it. I did a minor deep dive the other day, and so basically it's showing, and that we see that here, real simple uptrend on the 65-minute, downtrend flattening, not rocket science. This next one is just a measure of randomness. Is the movement that we're seeing in volatility now, this is doing volatility, is it random or is there a trend? And long story short, it's looking kind of random on the 65-minute. It looks like a trend might be starting on the daily in the volatility space. So long story short, And that's the best way you look at the VIX VVIX correlation. And where we're at is it's a little high, implying that VIX needs to catch up. That there's demand for VIX hedges or for hedges, and that we're kind of on this precipice, which we already know. So this tells us that we're on the precipice, which we already know. Okay, so good morning. So what time is the JOLTS not at 8:30? It could easily not be not at 8:30. Okay, I keep hitting the wrong one. That's the right one. Okay. So now let me, okay, Ben Hombre's here. I'm gonna bring him on the stage in a minute. Just trying to hit the high points. Very wide transition zone for today. Okay, glad you mentioned it. Let me see. Let's take a look at what I see. So here's what I see for today. For today, we have, let me just make sure I have the right day here. And I do. And I'm going to broaden the, oh no, okay, that's fine. What I see for today is kind of a little different. We have this one zone from 35 to 60, which is mostly supportive market maker positive gamma with this little bone in our throat at 40. So you could think of it as 35 to 60, or you could think of it as these two market maker negative gammas. So we have magnets at 40 and 65. So we have this area broadly 40 to 65, 35 to 65 if you want to kind of widen it out, with this supportive mean reverting feature in the middle, kind of near where we are at 50. So here's the area. Once over 60, and maybe this is what Gamma is talking about. Once over 60, we transition, and if this is what he's calling transition zone, I agree with him. We transition into market maker long gamma, short gamma rather. We have a stacked customer long dealer short calls from 65, double stack here at 70, 75, 80, all the way up to 5705 stall, 5700, 6700 round number. So the clear if then to me is if we can get over 65 with this little notch at 70, which I'm going to call bullshit on, pardon my French, there's a path up. Accelerated path up to retest the 6700 area. You know, I don't know. I think, and just because I think it's not true, but it doesn't mean it's true. I think that people will come in if they see we're moving along this path, 75, 80, heading up this way, overtaking yesterday's highs for the TA crowd. Then they're going to start buying 5,700-ish calls that could erode some of this stuff and pull us up to here. The big test, if that happens, if we exceed the expected move of the day, so there's a lot of ifs in here, if then, conditional, then we have this cluster at 5705, 10, 15, in here by the all-time high area. And then we have here 25 mark magnets, but these are the other side of these spreads. So I wouldn't put too much on that. And then above here at 40, we have a bunch of crap sold, I think. That's a technical term, crap. I pressed the wrong button. I have no idea what that means. Did I break it? No. What happened here? Here we are. I guess let's take this out a little past the round number of 50. I would imagine there's lots of stuff sold up there. Not that much. Okay, so we have a stack sold up at 35, etc. Okay, you usually use a 5 or 10 point wide transition. Got you. Okay. I think of a chop zone, not a transition zone. So, okay, so where were we? Okay, I now I'm remembering my old Gamma Edge days. Transition zone is usually a pretty clear over under where there's a character change, and we don't have that today. Gotcha. Okay, so where was I? Oh yeah, for fun, let's talk about the J.P. Morgan collar. Right, your algo draws it, right? I don't have an algo. I'm my own algo. Yeah, yeah, I remember you did the algo. Yep, you did some good stuff. That guy, they did some good stuff there. Fancy shit. Pardon my French. Um, so let's talk about the J.P. Morgan collar for a second. And this is just something that I like to do that amuses me. So we know the J.P. Morgan collar. Well, some of us know. Um, it's non-discretionary. They put on according to their prospectus. What they're going to do is they're going to buy. We'll get back to what they do for the zero DTE, what's expiring today in a minute. We'll circle back. What they're going to do is they're going to go to December. I always like playing this game. This is a good parlor game I like to play. They're going to go to December 31st, 3 months out, and they're going to buy a 5% out of the money put debit spread. So let's just do the arithmetic real quick. I did it before. You see that? We do the arithmetic. 0.95 times, we're just going to call it 6650, close enough. 6317.5. So they're going to buy, we'll just say, we'll go with 6320. They're going to buy a 6320, could be a 25, somewhere in there, but the price is going to be roughly the same. And they're going to sell, because they buy a debit spread, they're going to sell 6650 times 0.8, 20% down, is 6320. And a nice convenient 100,000 wide. The typical 1,000 wide spread that most of us buy. I'm being a little facetious. Okay. So I think that's right. Now, to finance that, this is not predictive. This is a collar hedge. This is for the big money clients or those who care to play. If we go down between 5 and 20% and we end up there at the end of the day, the end of December, they get paid. If we go up, too bad, they make whatever the upside is. And the upside would be, I did it before, 68.50-ish, I think. Oh, it's even higher, unless I don't have my numbers right. Oh, isn't that convenient? Could this be? Do I have my numbers wrong? 69.50. Let's double check the numbers. 63.20, right? You guys were checking me? 53.20. 6,900. That's more or less going to be the JP Morgan collar, give or take. That sounds an awful lot like 6,700. I mean, 7,000. Let me just put this here. And so people have been telling people they're crazy. Now, as you know, or as some of you may know, we end up closing at or above it most of the time. So Closing at 6,950, 6,700, 6,900 at the end of the year seems to be kind of a no-brainer. Expected move is 400 points. We're at 66. That puts us right at 7,000. So now it could be a drunken sailor path. The path could be by way of 6,000. Who knows what? Santa Claus rally, whenever that comes. I'm just saying. I'm just saying. So that's what we got there. Okay. What else? Okay. Oh, I overspoke Bad Hombre. Yeah, and 70 is definitely a top of transition. 70, it's a whole new ball game. And oh, where are we now? All right, we're still in the chop zone. Oh, and shameless plug. So those that subscribe to my service, either on WHOP or on Substack, get the note, get the roadmap, get the TV string, get the game plan with with the roadmap, with the shop zones, all that. I put them out on free on Twitter sometimes. Some of you see it. Get the little cheat card. You get all that stuff. And we do a screen share, and everybody talks and trades and whatever. I do a lot of the talking. Okay, so that's that. Done with the shameless plug. Also, since I was quasi organized this morning, I put in the discount links for options depth, which will go back to the options depth. I didn't spend enough time on that at all. I put in the discount links for options depth as well as for Mentor Q, which I didn't show you yet, but I'll show that in a second. 0 DTE. Let's bring this up to 67.35. It must be set to gamma. See, it's set to gamma because the bars are small. Position number of the bars are big. Why are the bars above us small? For extra credit, I'll tell you why. Is anyone going to want to type the answer? Why are the bars above us at 67.05 so small when I have it set to gamma, but so big when I set it to position numbers? Anybody? Okay. Gamma is dependent on distance that spot is from the level. If it's a 5 or 10 delta, it's got very small gamma. The highest gamma is at the money. That's why the gamma is going to show you that it's small. But if I leave it on gamma, for me, then I don't see the potential path because it's conditional. If we get through here, we got a path up to here, and these bars will get bigger as we travel in that direction. So as a reminder, as I like to do every day, because we have E-mini scalpers and we have other people here, not just gamma guys, and I'm just going to give you the practical down and dirty. Where market makers are long gamma from customer sold options, that's bars to the right over here, they hedge opposite direction of the move and they inject liquidity. So what would happen, broadly speaking, if we're over here at 6705, 6700, just looking at this in isolation, let's forget this. As we head up, they sell against the move. But then as we move away, now they're too short from what they sold, this big ass bar, and they have to buy. So you get that mean reverting grinding action near a level. Eventually it can be overtaken. Or if we stall long enough, then we get into the gravitational pull of another level. Similarly, from the opposite direction, if we're here somewhere, and we're going to ignore these bars for a second, and we stall, and we start heading down, then from this cluster, these three bars no less, market makers start buying as we go down, cushioning the blow down. As we move up, then they start to sell again. Now, it's great when you get between two levels like this, because then you have that ping pong action. Well, these are pretty far away, 6,700 and 6,660. So you have to be pretty much in the middle of it to get the ping pong action. But that's just kind of a visual representation of what, trust your eyes. You see the path. Now, these guys on the left are market makers, are short these, customers bought calls, whatever, and they hedge in the direction of the move. They're competing with you for price. They're bringing up the price. They're competing with you for price, and so there's clearly a path. If over 65, up toward here, and as we go up, the gamma will get larger, and as we start going up, people will likely start buying calls, and so over 70. 65, 70, whatever you want. Oh, if we can get over the 60 and stay over it, there's a path up. Things can change, volatility can go up, things can change. Next zone to look at, the 60 to 50, this 10-point zone is kind of stuck in a clump of positive gamma, mean reverting, sticky. Anything could happen here. Below it, below 50, we've got a little bit of stuff at 35, not enough to matter. We have long puts, magnet down toward 40. If we can get through this, toward 30. And then below it, we have nothing. And you see, if we look at the heat map and just look at the colors, it's basically light, so not a lot of hedging. It's kind of reddish, so there's a little bit of a path the market makers kind of have to buy. Kind of a yellow line is a glide path to 66.80 toward the end of the day. One broad zone, end of the day, is 6,600, 6660, 6,700. The 6650-ish area is kind of a support resistance flippy area. And if below 50, kind of you have this downside, with 25 kind of the max downside. Now, of course, we can go down lower too, but those are your most likely scenarios. Okay, he's back. Okay. So now that I got my buddy back, let me change this to a different watch list. How do I change watch lists? Here it is. Okay, now this is Mental Q. I'm going to put Mental Q on because they have futures levels and I don't do that. And that's one of the unique things about Mental Q. Is why am I not? Oh, okay. Is that they have good data levels for futures. Let me find E-mini. Here it is. I guess it's updating. Oh, I guess I need to show it. Okay, so here we have some gamma levels just for you to reference. Go ahead. You're on, Bad Hombre.
Hey, good morning, everybody. So real quick, as I'm looking at our ES levels here, these values will be from ES. Right now, the way I'm seeing it, if we can hold 6705 to 6700, I think we'll have a really nice push to at least 6725 would kind of be my target for the initial push up, maybe even 6730. Now, if we can't hold 6,700, I'd like to see a test of, call it 6,692, 6,690. But I'm expecting more ping pong than I am downside if we're not pushing up. That's kind of my theory for today.
Okay, so you're expecting maybe the push up if we get over that, if we stay up here, and that's kind of over that kind of, if we could get that move that you're talking about, that takes us toward that positive gamma zone, which is, let's say, where are we now? We're roughly at that 6660-ish level. So if we can get like that 5 points or so more, then we can have that same that acceleration that you're looking at also.
Yes.
And to the downside, I mean, on the gamma is saying, we have maybe 10 points down, 15. Of course, anything can happen, but there's nothing predictive saying that, that we have a big down goes Fraser, 40, 35, and the TA sort of supports that.
Yeah. I mean, if in the off chance, one second here, in the off chance we do break below, if in the off chance that we do break below and kind of hold 66.85, I could potentially see all the way down to 60. So again, still not a crazy move down.
Okay, so that's 20. That's if we go down 20 points from here. Let me just to reset it in my brain to SPX. So if we go down 20 points from here, well, that takes us right to the 35, which is kind of the bottom of my trap zone. And if below 35, then, it's really hard to say, 10, 20 more points. There's really nothing there to hang your hat on.
Agreed.
Then you just have to kind of play it by ear, see what the levels are showing you, see whatever you use, whether you use price action or that. I keep forgetting what you guys like to use. That I forget what it's called. It doesn't matter, like your depth of book or whatever. I know the futures guys use different things. Then you look at that, and what I'm going to look at is options flow. And speaking of options flow, let me get into okay, so much for my makeshift JP Morgan collar. So we've been getting, and I mentioned it before, systematic funds coming in, selling 5 and 10 white iron condos pretty near the open. By the time I get the data, it's maybe 15 minutes after the open or 40 minutes after the open. I've been doing a pretty good job of predicting where they end up within 5 or 10 points. And they're probably going to end up somewhere in the 6,600-ish level, 5 or 10 points lower, 5 or 10 points higher, which will set the edge on the bottom. And on top, they're going to probably end up, they might end up at 66.95. 6,700, which will set the edge on the top. Now, interesting thing I noticed, that's interesting if you're an iron condor seller, might not be interesting to a normal person. Um, there seems to be a few different flavors. One flavor seems to try to be getting more or less equal credit-ish. So they might be doing something like this. I'm just going to kind of make something up. They usually go for less premium. They might even do something like this. They might do something like this, a 5 wide, and something like that. That would be kind of in their ballpark. There's another crew that seems to not really care about the relative credit and might do something like, based on whatever they base it on, might sell a call spread, or it could be a put spread, but it's usually a call spread, on top for like 5 cents and a put spread on the bottom for 40 cents. So some will do it equal, more or less, credit equal delta based on whatever, and some will do it based on whatever else they do it, and they don't care if they get basically next to nothing on one side or another, and whatever. So you're going to get two sets of edges, and why am I calling them edges? Again, if for the non-gamma fluent, when they sell it, it becomes market maker positive gamma, mean reverting suppressive on the way up, mean reverting suppressive on the way down. Then we have these other folks, affectionately called by me the 100 wide gang, who usually sell 100 wide. I have seen them sell 80 wide on the rare occasion. And we often don't see them on the radar screen that much unless we have an unexpected move down. So last week, I forgot what it was, Thursday, when we had that down day, suddenly nearby we had this big 20,000 contracts sold, which was from the 100 wide gang, which normally we don't even see. So where's the 100 wide gang today? For example, the 100 wide gang today is on, well, no, that's not the 100 wide gang. Let's skip today, because that's JP Morgan. Okay, I'm not sure where the 100 wide gang is today, so we'll see if they did any 2 DTE. But we can see where they were on top. Here's the 100 wide gang on top. 20,000 contracts at 67.65. Now that's not going to matter today. However, if we had a crazy gap up overnight, whatever, then suddenly that will matter. So they typically show up and they don't matter in the hedging. They gets hedged out to nothing burger. They're making their like 0.01% a day for their risk, and they're not worried, so I'm not worried. Better than a bond, I guess, is what it is. So they're going to show up today somewhere, and we'll see where that, and here's the other side of that trade. You see, 65.40. So it's not exactly 100 wide. Sometimes it's 80 wide, but we call them the 100 wide gang anyway. So they're going to show up, and that may or may not make a difference. Now let's get back to JP Morgan, and I'm going to cut this short. So what JP Morgan does when they do that I showed you, when they set that collar at around 215-ish, give or take. So those calls will be sold, those puts will be bought, and simultaneously, as close to simultaneously as possible, they will be buying an offsetting amount of delta in the 0 DTE so that they don't like break the market, so to speak. So they might be buying, I don't know, I'm just going to make it up. 6650 0 DTE calls times 15 or 20,000. Typically what happens, I didn't back test it, I didn't write it down. This is just from my quantuition observation. When it comes in, we'll sometimes get a negative reaction from those negative deltas coming in, but pretty soon that clears out. And I think, and I can't tell you why, I just think, and I think it's true, but I know that just because I think it doesn't mean it's true, that whatever they buy in the zero DTE tends to be supportive. And we tend to have it tends to be supportive 230 to 315, and then like whatever effect it is wears away and we have the end of the day pinning. So that's what I noticed. Maybe I'm right, maybe I'm wrong. Take it for what you want. I trade it. I trade it that way and it works for me. Um, Other thing is the restrike. So their mandate is 5% out of the money. So if what they did at 2 o'clock, if we end up moving enough from there, and I don't know what enough is, I don't know what you know, what their algo or what their formulas tell them. If we move enough, they'll restrike it, moving the puts up or down, and then doing the corresponding selling the call to pay for it. Notice it's the puts that control what they sell, the call, not the calls. They don't see what call we're going to sell and then buy the puts. 5% down, buy it, 5%, 20%, 5% down. So when you buy, 20% down is the one you sell. You have a debit spread. What can I sell to pay for it? That's it. That's it. That's the magic in a nutshell. All right. Uh, so let's see. So I sold this yesterday, it looks like. I mean, more than looks like I did because I can see it here. I can filled yesterday. Looks like I saw, okay, so I sold these 10 wides over here for 90 cents. That's 60 cents now. That's fine. I did this for October 3rd. Let's see what that looks like. Opposite. Okay, so I mean, not surprisingly, they just basically haven't moved much. Oh, and I bought this fly for today. Oh, $1.50. Should I take the money and run? I'm gonna leave it. I'm gonna leave it. Yeah, so here's stuff that I did for today, and then there's okay. So, and I do all this in the room. I talk about it because the goal is to educate people, not to teach them to fish, not to fish for them. But hold on, let me do something. This is for me, not for y'all. Opposite. I'll go 40 cents. I like to buy them back at 50%ish. I don't have to be a hero. Then I might manage some of the sites separately, but default I'm putting it in to buy the closing to just take my money. Then I might manage it separately. Also, this is not an account that I do my active trading on. So actually, let me do something. So I'm not babysitting it a lot. Let me just put in 250 as a target here for now. Sometimes I miss the boat because I'm not watching it. Okay. So now, what would I do now? Let's forget this, the correction of what's happening now. Let's look at a 15 wide. That's fine. I'm happy with that. All the way down to 65.90 for today. What? On top, top is a little trickier. Gun to my head, 95. I'm ready short to 10. Let's go 5,700 over here like that. Now let's make them pay me for it at least. Put in for 50 cents, see if I get it. If I were doing a 5 or 10 wide, it gets a little trickier. For the 5 wide gang, yeah, something like that, maybe 95, 6,700. Although you might want to be away from the round number here. Yeah, I don't know how different people trade their 5 wides differently. Something like that. If you're looking like just to scalp a little bit of premium. If some people like to kind of get a percent, have like a little better risk reward. So an 85 bottom, and I might do one of these for fun. I don't know. We'll see. An 85 bottom and a top of 10 bottom, something like this might be good. 85, 90-ish. This is a buck. Some people like to get a third the width of the spread, so then you have to go closer, obviously. A third the width. You kind of have to go here. And here. That would be a third the width of the spread, 80 on top and 15 on bottom. You might take some heat and you might be okay. I'm not a fan of the third the width of the spread thing, usually. But something like that might be fun to do one. I just don't like the 80. I just think the path up, as we saw before, could be a little dangerous. I'm not going to do it. We probably don't get there and stay there. This is going to be a game time decision. We'll see. And that's it. Oh, I put on a little CSX trade. I've been in and out of CSX all year. I want to show you guys something. All year, on and off, and there's been takeover noise and all that in CSX. I also do stocks. Got 50,000 contracts here at 35. They've been here for a while and they've been accumulating. We had 5,000 yesterday again at 35, and we have some around it. Takeover talks. This 35 has been there all year and it's been growing. If we look at a chart real quick, we've kind of tickled over 35 a few times. They started buying the 35s like earlier in the year before the March sell-off. We were in the 30s and we had this mess, the April tariff tantrum. And I forgot what happened here. Maybe bad earnings but I mean, no big deal. It's down 3 points or 5 points. And so that's the story with CSX. So I just, I have earnings coming up, whatever. I'm just kind of thinking out loud here. Okay, that's it. I'm going to go see what Dan over at Vol6 has to say. Take care, everybody. Trade safe.